Sunday, everyone. Let me make sure we got good audio and we'll get right into it. Sunday, everyone. All right, good to go. All right, again, happy Sunday. Happy Father's Day to all the fathers out there. Very fortunate myself to have two very strong father figures in my life, my father and my grandpa. So huge shout out to them. Very grateful. I know not everyone has the privilege of having a strong father figure. So happy Father's Day to all you guys out there that are fathers and supporting your kids, daughter, son, in the best way you can. It means a lot, and huge shout out to all the fathers out there. Hope you guys are enjoying your Sunday. With that being said, guys, we're getting back to business here today. What we're looking at in dollar, crude oil, and indices. Who could have saw what was coming? Who could have saw that coming, huh? Let's get into it, guys. All right, so let's start from the monthly chart here. And before I actually even get into the specifics themselves, Williams, hello, sir. Good afternoon. Is FOMC going to push gold and indices to all-time highs? If everything that's been in motion stays in motion, that would be the case. But we just need to make it through Monday without blowing ourselves up at this point. So we'll see. As long as we can make it to Monday without everything getting blown to shit, then we should be able to see new all-time highs. However, of course, that's the uncertainty in the current climate that we're in. Silver Bullet Trader, hello to you, sir. Cleo, happy Father's Day. Very kind words. Thank you very much. Eslam, welcome back. Benson, Sundays are for Dylan Richards. Yeah, absolutely, man. Sundays are for getting ready to make some fucking money. Let's get into it, guys. All right, so we're going to take it from the top here with the monthly chart. Again, do keep in mind before I get into this analysis, we've been on the brink of World War III all weekend, and we can open with an insane gap on Sunday. So everything that I'm about to share here is what I'm looking for. It's what I'm going to be anticipating. However, do keep in mind that this analysis, you do want to take it with a grain of salt because we could see a jarring gap opening on Sunday. So do keep in mind a lot of things we're picking up over the weekend. So those are all things that are going to be factored into the price delivery that we're going to be seeing. So do be very mindful of that going forward. RJ, hello, sir. Cycloss, happy Sunday to you, brother. Mahmood, can you share with us your latest trade reviews? That's a good one, Mahmood. That may be something I'll start doing. As you guys can see, I'm starting to get active on YouTube again. Want to do my best to help you guys out that aren't able to invest in yourself, get the skills you need, still have the knowledge available to you on YouTube. And that's going to be my goal going forward. I just made a backtesting video this past week. I got a video coming up, which is going to be showing you guys my one trading setup for life. There's only one setup I could trade. This would be it. And I'm going to share that video. I'm going to get it recorded tomorrow. So it'll likely be out either Tuesday or Wednesday. So this next week, you guys are going to get a full breakdown of the number one model I would trade if I could only trade one setup for the rest of my trading career. And I'm excited to make that available for you guys. With that being said, though, like I said, going forward, I will be making much more content on the YouTube side of things. So let me know what you guys want to see. My man Mahmood said you want some trade reviews. Trade reviews are definitely something I can do. And let me know what else you guys would be interested in, and I'll look to make that possible. Horse, what's going on, man? Kevin, happy Sunday. Dylan, happy Father's Day. Absolutely, Kevin. Happy Sunday to you as well, brother. So yeah, with that being said, guys, as I was saying, anything you want to see, drop them in the comments, drop them in the chat, and I'd be more than happy to use that sprint for some inspiration for some ideas going forward. With that being said, let's go and get down into the business and share what we're looking at here for today. Again, do keep in mind the climate we're in. Things can change very, very quickly, right? Just a slight escalation can completely throw all this analysis out the window, and we start seeing some wild price delivery. So again, do take all that with a grain of salt as we go through this analysis here. Gonna look to keep this one short and sweet, direct to the point as I have been. I got to record a mentorship video right after this. So for those of you guys that are working with me, month 3 content will be finalized by today. Huge congratulations for those of you guys that are powering through the content and seeing price on a whole nother level, like Neo and the Matrix. Start seeing things for what it is. Let's get into it. All right, monthly chart here. We've been looking for lower prices on dollar that's been delivering to script. Sell side taken on the monthly chart. Next level that has my attention is this down close candle here, former bullish order block. Not extend that right. So downside target, I like this down close candle here. And then what you'll also see is inside that down close candle, there's also these 2 volume imbalances, which create a PD array in and of itself. So I'm looking for the down close candle, more specifically that little inefficiency down in there. And I expect the market's going to keep drawing down into that. And then what I'm going to be watching, the way I read institutional order flow, candle by candle is I see how we trade at these particular levels, right? So for example, if I'm saying this order block is a draw on liquidity, that doesn't mean I'm expecting it to drop down to this level and then bounce and make new highs from there. I'm studying how we trade at that level, right? Do we close below 50%? Do we close below that entire range? Then do we use it as a bearish mitigation block and start to sell off, right? That's what I'm looking for. That's what I'm going to be reading into the price action. So whenever I'm giving you a key level, there's a lot to do with that. It's a target, yes, but it's also a means of reading order flow to trust if the move's likely to continue or if it's going to reverse. And that's just basic reading of order flow. Nothing too complicated there. So monthly candle looking for heaviness into these specific levels. If we lose that down close candle, my attention goes to the sell side here. And then from there, we could look for this down close and then these two consecutive down close candles for a longer term target. All right, working down into the weekly chart here. Let me go zoom out. Actually, let's go ahead and zoom in and then I'll zoom out and give you guys my targets. So last week, market delivering the script. This is a daily breaker that should not be on the weekly chart. All right, so we covered this weekly gap here, and that is not an inversion fair value gap. I did not look at the charts before this. So you guys are gonna have to bear with me here. We're rolling off the cuff here today. Had to get to the breakfast buffet in time before they close it and have enough time to do the pre-market analysis, but no worries, we'll still get it sorted out. So I just have to be a little patient while I get my annotations toggled. All right, so weekly chart, looking at this gap, don't know why that was labeled inversion fair value gap. We wanted to see if it could act as inversion when we were above it, but then the market ended up doing what? Decisively breaking down through it, trading up into it, hitting the lower quadrant, respecting that. That's telling you as smart money, hey, look, we're bearish, we're going lower, right? Hits it, nosedives. I gave you this wick here, 50% of that as an initial draw. They delivered that the previous week. And then what was the other target? I gave you below 50% of that wick, the actual sell side below that low, right? This actual low here. That was delivered beautifully. And that's what we saw last week. Nothing's bullish in this price action. Everything still looks heavy, bearish to the downside. I'm not trying to call a bottom in this market. So what I'm looking for on the downside to refine the monthly levels, I gave you down to the weekly chart. I like these smooth lows down here, which have actually already been delivered. So you can see these equal lows here. That's a really nice draw, but that's actually already been taken out. So we need to look below market price. So we have this wick here. That would be a good level, 50% of that. And then more specifically, what I'm going to be looking at is this down close candle here. So extend this down close candle through. That's going to be a draw. Through that, we have 50% of that down close candle. If we lose 50% of that down close candle, then my attention goes to these lows here. You can extend that through. And that's what I'll be working with here on the downside. Market's still extremely bearish. Again, this gap here, respected, broke down below it, respected it, clear, bearish institutional order flow, nothing bullish as of yet. However, if things do start to escalate on a very serious level, keep in mind the ramifications that's going to have on the US dollar. In case you didn't know, I want you to know, when the prospect of war goes up, oil also goes up. I'm sure you guys have seen crude oil flying, and that's why I was making the joke earlier of who could have predicted that, right? Who knew crude oil was going to fly after they took those sell stops? Not us. But saying that to say, we see crude oil is what? Ripping. If you understand the system of the petrodollar, you need dollars to buy oil. So I know sometimes when I cough, it kind of comes through loud on the microphone. As I was saying, if you understand the petrodollar, you need dollars to purchase crude oil. So if you understand that, and crude oil is, and what is crude oil? Crude oil is the lifeblood of every single economy around the world. Every economy needs crude oil, right? If you don't have crude oil, you're fucked. So you need crude oil as an economy, as to function, obviously, in the economy. So if you can only buy crude oil in dollars, then that does what? That raises demand for dollars. Because now every economy needs what? Oil. So to get that oil, they need more dollars to purchase said oil. That's why the military is in the Middle East, and that's why, you know, there's a lot of vested interest in the United States protecting the petrodollar. That brings up the point of, if we do see escalation, dollar can reverse it. So what would cause a disruption to the analysis I'm sharing is war escalating, US getting involved, China getting involved. Those would all be factors that could completely undo this analysis here I'm sharing because of the factors I'm mentioning. And the petrodollar is just one of them. The other one is, historically, people have viewed the dollar as a safe haven asset, right? So large funds, people with deep pockets money goes into the US dollar when there's more uncertainty because the dollar is always been viewed as a safe haven asset. So there's a lot of factors that would drive demand for dollar and send it higher. So a lot of things to consider, but barring anything crazy like that, we're still looking for lower prices. If the market does change direction and we are going to see a reversal and go to the upside, then the price action is going to tell that to us. So the good thing is we don't have to guess. Just take it candle by candle. The reason I'm bringing up all this context is because you need to understand the climate you're trading in, right? And just because I'm telling you sell side and shit, yeah, Dylan's precise, 90%, man, I'm going to go all in. Don't do that this week. Don't do that this week. Things can change very abruptly. So I want to give you guys all that context so you aren't putting yourself in a bad situation, taking wild risks. We're in a very difficult climate right now. Risk is extremely elevated, so do be mindful of all those things. Working down into the daily chart here. We've been watching this down close here. Why that down close? Why is that important to you? It's a bearish breaker, right? So you have a high, higher high. The lowest down close inside that range, extend that through. And then look at how the body's here, trading up into it. But look at the body's perfectly stopping there. The wick's trading up into it a little bit, but the market turning on a dime. You just love to see it. You just love to see it. It just proves again the markets are completely rigged, controlled, scripted, and easy to read if you know what you're doing. Bearish breaker, sending price lower. Weekly wick midpoint, we delivered that. I'm going to take that off now. And then below that, we had the sell side liquidity, which was delivered real nicely on Thursday, making the low of the week. And then Friday, giving a TGIF, trading back into the range. Very classic delivery last week, selling off from that bearish breaker. So what I'm watching going forward here, we've already traded into the breaker, so there's no need for the market to get back up into that. So what I'll be watching will be this gap right here and see if we can stay below that. So as long as we stay below this gap, I'm looking for lower prices into the specific targets that I gave you guys already. Lower time frame. Yeah, so daily gap is going to be the key level. We already broke down shifted market structure here, so I'd prefer to see this hourly fair value gap here send us lower. But again, where we're going to open on Sunday, nobody knows. So do keep in mind that we could open very far away from this price action here, and it may not even be relevant. If it was a more standard open, I would look for this daily fair value gap. We already traded up into it, respected it, broke down, shifted market structure. Fair value gap with the breaker, I'd look for the market to sell off. But again, with the climate that we're in, I do have to see how we open, and then that'll give us a great deal of insight if and when the markets get there. All right, moving right on. Let me cover euro before I get asked. It's going to be the same deal as US dollar, just the inverse, right? So buy side cleared for euro, easy read, right? For a bearish dollar, then it's simple euro and pound's going to go higher, right? So we have buy side there taken out. Next row here would be this buy side here, and make that green. And then we have these smooth highs here. So we have these equal highs, then these smooth highs here. And then through that, we have that gap. And then eventually the buy side back here, as long as we remain bullish, which in my mind, nothing is bearish foreign currency just yet. Working down into the daily chart, same deal as S&P. Watch that gap there. Also have a little breaker here. So this up close, extend that through. Would want to see that supported and send price higher. All right, that's it for currencies. Let's get into bond market. So bond market, before we zoom into the weekly and the daily chart, again, do keep in mind this monthly time frame. I know I've brought this up to you guys a few times this year, but bonds have remained in this prolonged period of consolidation, right? So we've been in this range bound profile for a long time in the bond market, which is why we're seeing a bit more difficulty across all these other asset classes as well. So because bonds are being held, bonds drive the entire financial system. So if the bonds aren't moving, the interest rates aren't moving, then that's going to make it a little more difficult to have fundamentals behind your analysis when interest rates aren't also moving. So that's why we've seen a little bit more difficult price action as of recent, and it's simply because the bonds are in a consolidation. So do keep in mind higher time frame, we are in consolidation on the bond market. So dropping down into the weekly chart here, we're starting to see a lot of this overlapping price action here. Key level that I'm watching on the weekly chart for my longer term analysis is this gap here. Let me go ahead and make that red. That looks good. All right, so weekly fair value gap, we traded up into it. We are seeing the body stay in the lower half, so the bodies are respecting that. As long as you remain below that, I will still be bearish, but as of right now, we're in a consolidation. So I'm neutral to bearish. What that means is I prefer to see it go lower, but because we're in a consolidation, I don't have a great deal of confidence that it's going to drop this week. Generally, when I give you guys analysis, I'm also giving you timing as well. Like I'm looking for these targets this particular week, and that's what I'm going to be trading and putting my money on. That's usually what I'm giving you guys week to week. But I don't have that in an asset class that's in a consolidation. So right now, as long as you remain below this, I'm bearish, but I'm also neutral because we're in a higher time frame consolidation, and there's just not a whole lot for me to do with that market structure. And then you can see even more clearly when we get into the daily chart. You see on the daily chart here, I've been watching this breaker. Technically, we are still respecting it. This is that weekly gap. I'm going to go ahead and take that off here. Bearish breaker, we're still technically respecting that here once more. We do have all of these equal lows here, which would be interesting to see them take that out. So as long as you remain below that breaker, I'm looking for lower prices. But again, just zooming out, price action has been an absolute mess on bonds for the past couple of years. So do keep in mind that while I am bearish, while I do want to see that act as a bearish breaker, nothing to bet the farm on. This market's in a consolidation profile. Covered bonds. All right, let's just get right into indices. All right, so starting from the top here with NASDAQ weekly chart. Weekly fair value gap here. That was a draw on liquidity for us when we were down here. Right, we're looking for the market to draw into that inefficiency. Now that we traded to it and through it, I like what we saw, not last week, the week before last, where we saw a real strong close above 50%. That indicated to me that the market was bullish. Obviously, we've been looking for higher prices, so we're not trying to call it top. However, what we saw last week on the close, which again, if you look at the daily chart here, a really nice sell-off on Friday. After Thursday evening, we had the news of the escalation in the war in the Middle East. So because that happened, we got a huge washout on Friday. What I'm watching right now going forward longer term, still going to avoid calling the top of this market until the market shows its hand. But I am watching this weekly gap here. As long as you remain above that weekly gap in this down close candle, I'm bullish looking for higher prices. If we lose that level, then I will likely concede and say, okay, this is likely going to be an intermediate term high, and we're likely going to want to break down, work into this gap here, and potentially much lower, just depending on what it is that would be driving that price move. So this weekly fair value gap long term is going to be key for me, and that's what I'm weighing out going forward. And that down close. And so down close here, and this weekly gap. All right, dropping down to our daily chart. We've been trusting buy models on equities going forward, and all that means is we're just looking for higher prices, right? Very simple, bullish institutional order flow. Down close candles, respected, right? Down close candle, respected. Inefficiencies, traded into, respected. Inefficiency with the down close candle, respected. Down close candle, respected, and we're seeing clear bullish institutional order flow. However, now going into what we saw on Friday, we drove up on Wednesday into this daily imbalance here that we were looking for, and then we got a real strong rejection. You see the market could not get up to 50%. That's not bullish. And then what I'm watching here, this gap, we wanted to see that act as an inversion fair value gap. Temporarily it did, right? We did get above it here, use it as support, and use it to reach higher. But now we broke back down through it. I don't like to see that because we also have a down close candle here. So we have a down close candle, bullish order block, and an inversion fair value gap that we traded down through. So what I'm watching right now, I want to see, can we stay supported inside this down close? However, if we lose that down close candle, then my attention goes to sell side here, and we could see an intermediate term high and a potential reversal. So that's what I'll be looking for going forward. I will be confirming that on the lower time frame. Not the 4 hours of lower time frame, but lower time frame from macro perspective. Macro perspective being monthly, weekly, and daily. All right, let me take these levels off here. It's not needed. All right, so 4 hour chart. Again, we saw the market dig up into that daily imbalance we were looking for. From that, we then got a nice breakdown here. Potential shift in market structure. Market retraced, up close candle, bearish order block. We respected that. And then on Thursday evening, when the escalation in the Middle East occurred, we got a huge repricing to the downside to run out the sell side liquidity here. Right? So even though it's manual intervention, when a black swan event happens, and what is a black swan event? Black swan event is just an event that you can't predict. It just comes out of left field, right? No one can predict exactly when that's going to happen. Of course, we've known for a long time it's been going to happen. There's been going to be an escalation. You know, all these things obviously have been very predictable. But the exact timing of when is not predictable. Nobody knows when they're going to do that. Unless you're real high up in a club you probably don't want to be in. So sell side here taken. So again, even when it's manual repricing, they're still going to drive it to levels of liquidity and inefficiency. It's just going to do it at a very violent pace. So who's been long? or sorry, who's been making money? People that have been long. Where's their sell stop going to be? Equal lows here, and just a massive repricing to take out those sell stops there. Once we got those sell stops taken out, we then got a retracement back into this 4-hour fair value gap. I'm going to take this off just for a moment. What I'm watching is this 4-hour gap going forward and these up close candles. So I want to see the active bearish order block with the fair value gap. If we respect that and we see the market sell off, then I'll look for sell side here, and then this low down here. And that's what I'll be looking for if we respect that gap there. Let me get that daily fair value gap back. Perfect. So that daily gap that we use as a target, and then we use that as an inversion fair value gap once we got above it, use it as support to reach higher. We've now broke back down through. So if we respect that daily gap that we had on our chart and we stay below it like we're seeing right now, trade up into it, respects it, sells off, then that would be bearish. And then looking at this from a market structure perspective, Leon, to go ahead and answer your question, my man, this would, not intermediate term, I'm sorry. This would be an intermediate term high in my analysis, because now we have short-term high here, intermediate term high above, and that could create an intermediate term price swing to the downside, more asking from a market structure standpoint. And then dropping down to the hourly chart, we have that further cemented with this actually now being on the hourly chart, a long-term high. So long-term high because we have an intermediate term high here, In between two intermediate term highs, we have a long-term high. When you see that in the market structure, that's likely going to give you the optimal conditions for large price swings. That's why market structure is so important, because it helps you predict price swings before they happen based off the market structure that's forming, but you got to understand how to read it. So potential long-term high forming here. If we respect this intermediate term high here, then then that would be extremely bearish. We see the market traded up into this fair value gap here and breaker here, extend that through, and then a nice rejection. So as long as we stay below this daily fair value gap, and if we stay in the lower half and sell off, that's extremely bearish for equities. And then again, my attention's on the sell side here, and then the sell side all the way back here from the 23rd of May. Again, that's what I'm looking at right now, looking at the candlesticks at present. Things can change when we open at 6 o'clock here on Sunday. And again, I'm welcome to pivot, be flexible, have new targets, because again, we may not even be close to where we're at right now come opening price on Sunday. Let me touch on S&P. It's really the same thing for ES. It's got some journaling going there. S&P is going to be the same thing. Down close candle, want to see the active bullish order block if we're going to remain bullish longer term. However, when we zoom into the lower time frame, in the short term, we have seen the market take out this low here, shift in market structure, another break in market structure here. So as of right now, things do look good for the downside on the intraday time frames. So as long as you respect that fair value gap here, I'm looking for lower prices. What would tell me I'm incorrect in that regard is if we get above that gap, use it as support and rally. Either which, money's going to be made this week, so I'm not worried about it. Those are just the two scenarios I'm going to be watching going into the new week. Any questions for me, folks, before we get going? I will touch on crude oil as well. So usually you guys ask about crude oil. I will touch on that. You guys don't have to worry about it. Big Mike, you're the shit, bro. I just found your channel 2 weeks ago, and I've already learned a lot from you. Really appreciate that, my man. Thank you very much, sir. Much more to come. Much more to come. We're just getting started on this whole YouTube thing. So really appreciate your feedback. And again, do let us know what more you would like to see from us on YouTube. As I was mentioning at the beginning of the stream, I will be getting more active on YouTube going forward, giving you guys the resources you need to be successful. Again, even if you're not able to make that investment in yourselves to get the help you need. So I want to make that available to you guys. Let me know what you guys want to see. And I'm more than happy to create that content for you guys going forward. Slim, hi everyone. Hope your weekend was good. Yes, sir. Slim, hope yours is as well, my man. Nalab, thank you, sir. You're a real trader. Thank you, Nalab. Really appreciate that. Hope you're doing awesome. All right, so I said I'd look at crude oil. I don't want to forget that. And then I will get to your guys' awesome questions. All right, so let's start with crude oil here. So zooming out to the monthly chart. The analysis for crude oil is going to the moon. How's that for some analysis, huh? All right, so as we covered last week, as I was saying in the Discord, show me the charts. I'll tell you the news. What happened on crude oil? Long term, I'm bullish. I think crude oil, energy prices are going much higher. We see the market drop into what? All this sell side here. What's below that? Anyone that's long, they have their sell stop below these lows because that's what the book's telling them to do, right? That's real strong support. Once we drop below that support, two things are happening. Traders are wanting to go short because they think it's bearish because support's broken, or they're long and they get stopped out on their long position and they have to sell to close out a buy position. What that does, that allows smart money entities the opportunity to go long. If I'm taking your attention to last week, this being sell side and likely a key turning point, I'm pretty sure the people that control the market, they probably knew the same thing. Let's just go out on a limb there. I'm sure they knew the same thing. So when it's dropping into a discount market from this low to this high, Dylan, why not use this low here? That's all manipulation. So I'm not worried about that. I'm gonna use this swing here. They drop it into a discount below sell stops. That's the perfect place for a smart money interbank trader to start buying the market here. From here, we see a turning point, and we're likely going much higher on crude. Again, last week I gave you guys all my targets. I'll say it again here for you guys. I'm looking for crude oil to get into the 90s. Once we get into the 90s, I see us getting into the hundreds, and then from there, we could easily see crude oil take out this old high here, get back into the 130s, and then we could see crazy moves higher on crude oil. Dropping down to the weekly chart here, this is an inversion fair value gap. I doubt we'll even come back down to it, but ripping through that gap here, we talked about that last week, because if we're bullish, we don't expect the market to hit the gap and sell off, right? We want to see it get to it and through it like we're seeing here. So easy to expect. Again, it's not just, oh, there's a fair value gap, must be time to short it. You have to know what you're looking at. Fair value gap, we got through it. Next draw is going to be buy side here at the 81s, buy side here at the 85s, buy side at the 88s, and then buy side at the 95s for the foreseeable future. Working down into the daily chart here. Yeah, just look for higher prices on crude oil. Not much more to say. All right, let me go take a look at Nalab, take a look at gold. Yeah, it's going to take a look at gold. So, of course, like I was sharing with the dollar, gold is also a safe haven asset, right? Gold has held value throughout all of history. So it's probably a good place to put money in to preserve wealth. When we're in higher times of uncertainty, whether it's economic uncertainty or whether it's geopolitical uncertainty, because of everything that's going on, money flows into gold because investors that have wealth, they want to protect that wealth. No better way to protect it than a shiny object that has not lost value over thousands of years. Pretty simple. Gold going much higher. So if you guys remember, we talked about this bullish breaker here on gold a while back. Probably a random turning point there. Low, lower low, highest up close, that's your bullish breaker. We talked about that as a downside target, but because we're higher time frame bullish, we were looking for the market to do what? Drop, a sell to buy, right? Not trade down through it and be bearish. So we hit the bullish breaker, market displays higher. We're watching this down close candle last week. When it's the active bullish order block on Monday, it did. Buy side taken here, buy side taken here. Next draw is going to be the 30,500 level and beyond. If things really start to kick off with what's going on, we're easily going to see gold go to 4,000, 5,000, and then climb much, much higher from there. So that's the business on gold. And let me see. Islam, is it possible to expect when you're... Gotcha. Good question. That's on my see that. Yeah. So is it possible to expect when your model is not going to work in a specific profile? So this model I'm going to be sharing on either Tuesday or Wednesday. It's universal and it can be applied in any market condition because what you're taking advantage of, what we're doing as smart money traders. Like if you take all the lipstick, all the nonsense off your charts, everywhere, and you just focus on where's the liquidity, where's the highs and lows with the orders, you will see and you will have your eyes opened up to the fact that the markets are doing the same shit every single trading day. Let me go ahead and take all this off here. So going at 9:30 here, what do we see at 9:30? The market opens, runs for buy side, runs for sell side, and then runs for buy side again. The markets every single day, even on a seek and destroy day, even on a high resistance liquidity run day, it's still running for highs and lows. You just have to know how to know which highs and lows it's going to run for. That's obviously how we find setups. This setup forms every single day. Every single day, the model I'm going to be teaching you is there. Not this mean you're going to make money with it every single day, because of course you have to get in, know how to place a stop. You know, there's other things you have to know how to do, which of course I'll cover. But that model I'm teaching is an everyday model. Not that I coach and teach you should be everyday trading, but it is an every single day model, because the fact of the matter is, if you look every single day at your charts at 9:30, the market is running for buy side and it's running for sell side. Those two things are true in the market every single day. If that is true and we have markets and they're running for liquidity, the model I'm going to teach you will form every single trading day. Great question, Eslam. But I have taught a little bit on high resistance liquidity run profile, how to select seek and destroy days. So those are things that are going to help you, because naturally, if you know how to predict more lower probability price delivery, that's going to give you an advantage with any model you're trading. I don't care if you're trading the 2022 model, the optimal trade entry, order blocks, breakers, whatever model you're trading, you still have to understand market profiling and how to determine, are we in high probability or low probability market conditions. So those are things that we still have to be able to determine regardless of any style, strategy, model that you're going to be trading. So of course, there's truths to the market that we always have to be mindful of, which is what I just covered, understanding the different market profiles. However, the model I'm sharing does make money every single trading day if you're correct. That doesn't mean you're going to be right every day, of course. So again, I want to preface it with, doesn't mean you're going to be right every time, but it is absolutely a high-powered model. Let me see. Take a look at Aussie dollar yen. Yeah, it's going to take a look. All right. So monthly chart, we had all right, so monthly chart, we had sell side taken here. So I just need to measure, make sure they actually took out that low. So we had this low taken out here. That's bullish short term on the monthly chart. Weekly chart, what I'm watching here is we have an inversion fair value gap. And now it's not showing up on the weekly chart. Get that up here on the weekly. All right, so weekly chart, we closed above this inversion gap. We're using it as support. As long as we remain above that, I'm looking for higher prices on the Aussie yen. Daily chart here, this is an intermediate term low in my analysis, so I would not want to see this low taken out. Weekly inversion fair value gap, we traded down into it. We're using it as support. I'd like to see us stay in the upper half, and that's denoted with this midline here. So as long as we stay in the upper half, that's going to be bullish. And I like these equal highs here for, again, the Aussie yen. That's what I look for on the upside, as long as we stay above that weekly fair value gap. The other market is the dollar yen. Yeah, let's take a look at dollar yen. USD JPY. And again, my hope with what I'm doing here is going to be for you guys to be able to take these insights and find your own analysis as well. For example, right, if we're looking for lower dollar, then what's that going to do for other assets that have dollar in them, right? You're able to determine that risk on, risk off relationship with simply what I'm sharing here. So eventually the graduation over time for many of you guys is going to be understanding what you're looking for and then being able to frame that across multiple asset classes. I'm glad you're here asking. I'm glad you're using the resource I'm making available, but over time, as you continue to put in the proper study, look at the charts yourselves, mark them up, back test them like I showed in that last video. If you're not back testing, you're 100% going to stay in the same place that you've been in the last year, 2 years, 3 years. So if you want to know what the next year, 2, 3 years of your trading is going to look like, look at the last 3 years. If you don't make a change, that may feel uncomfortable to hear, but trust me, nobody wants you to succeed more than I do. And of course, you guys want that for yourselves. So do the right things. Do the right things. Focus on building the skill set the right way, because I know what it means for you guys to be consistently profitable. And for a lot of you guys, you're fucking around, not doing the right things, hoping some different result is magically going to happen. And someone needs to tell you that you need to do the right things. And I'm okay with that being me, because if any of you guys do take that advice, do the right things, learn how to make money, you're going to be glad you did. All right, dollar yen, let's go up to the higher time frame here, weekly chart. We have these equal lows here. So because dollar's weak, I do like to see the yen sell off, but because of what we're seeing with all the financial instability in Japan as well, with the debt market and all these things, they've actually been holding dollar yen. So as of right now, I have zero opinion on dollar yen. Dollar is bearish, so because of that, I would favor lower prices, but they've held it in a consolidation. My rules are, when the market's in a consolidation, I wait for it to displace out of the range, right? So I want to see the market move outside that range. Then once we get to that point, then we'll be able to have more information to work with. But while we're in a consolidation like this, it can be really difficult to frame one side of the market in a high probability, low risk way. And I'm just not able to do that in this type of market structure here. So gun to my head, I favor lower prices because dollar is bearish. But in this market structure, there's not a whole lot for me to look at on dollar yen. Great question. What about Bitcoin? Yeah, let's take a look at Bitcoin. Yeah, Bitcoin kind of in no man's land here. We took out the all-time high. Now we're just kind of consolidating here. So Bitcoin looks like it's going into a bit of a consolidation here. We're in between this intermediate term high and this intermediate term low. So Bitcoin looks like it's in a pretty good consolidation. What I would be watching for bullishness would be this down close candle here. And then for bearishness, we have this balanced price range here. So we have this balanced price range here to the downside. And we're basically just trapped in between these two levels. We're trapped between the bullish order block and this balanced price range. So what I could see is we could just gyrate in here for a while. What I would look for is, do we sell off or do we trade through it? Not that I'm a breakout trader. Like, I'm not shorting the breakout, chasing it, or longing the breakout to the upside. Like, I'm not trading like a retail gambler. But I will be seeing how we leave these PD arrays, either the bullish order block or the balanced price range, because we're held in the range right now. A lot of uncertainty again with everything going on. So that will reflect in the price action. Great question, Sufian. Hopefully I'm saying that right. Williams, I'm quite good at predicting where the market is likely to draw to, but I struggle to know how/where to get involved in the move. Any insights would be appreciated. Yeah, good question. Good question, William. It's like that for many, right? Because it's one thing to have analysis, but it's a whole other thing to get an entry, put risk on the table, know where to place that stop loss, where to get out, manage emotions, and do all those things at the same time. That's why I recommend find a model that resonates with you. So like, let's say Williams, let's say, you were coming to work with me. First thing we would determine is, what PD array do you see the easiest? Is it a fair value gap, an order block, a breaker? And then you want to get good at studying now. And then what I would recommend you to do is look at the video I made on back testing. Maybe you already seen it. And then study that model. So if you're already good at seeing where the market's going, great, that's not your problem. You just need to trust your model. Well, how do you trust a model? How do you trust a setup? You have to see it hundreds of times. Like, that's it. There's no way around it. Same thing like a doctor, right? They're doing what? They're doing cadavers. They're practicing on fake surgeries, right? Pilots, they're flying in simulation. Why are they doing that? They're doing that to get hundreds of reps so that when they're actually in the real thing, they have what? Confidence. Trading is no different, guys. So if you want to take trading serious, if you want to know what to do so you can have confidence, it's going to take work, but you have to work on the right things. So now what that is you have to go in the charts and see your model every day. And then what's going to happen, Williams, with you doing that for a week, a month, 2 months, 3 months, is you're going to have so much confidence because you've seen your model work more than it doesn't. That confidence cannot be given to someone though. That has to be earned through digging into your charts, back testing, and doing the right things. Most people don't know what backtesting is. They don't know how to do it the right way, which is why I decided to make that video because I see a lot of jokers in the industry talking about backtesting or saying you should backtest. But how do you do that? How do you do it in a way that only takes 45 minutes to an hour? And that's what I revealed. So that's going to be the thing that's going to get you over that hump of that uncertainty is how to get in. And it's just going to be through getting the reps and doing that intentionally every single day. And also being prepared mentally. That's going to take some work, right? You guys are trying to do the hardest thing in the world, which is trading, right? If it was easy, everyone would be a millionaire off their laptop, right? But unfortunately, that's not the case. So gonna have to put in some work. And that's what I would do if I was in your situation in terms of how to trust getting involved in the move. Because that's essentially what it comes down to. If you know where it's going, you just need to have confidence to put the risk on the table. But you need to do that with the model that you've grown to trust over time. Maybe it looks like I need to make a video on how to select the trading model and get comfortable trusting it. That'd be a good one. All right, awesome, guys. Thanks, Dylan. Good insight. Yeah, my pleasure. Glad to be here. Great questions. Sufian, thank you. Yeah, glad to be here. Hi, Dylan. If you haven't, gold, silver, oil. So covered oil, covered gold. Did not touch on silver. I will cover that right now. Just join, no worries. That's why the recordings are always available. Appreciate you joining, Amy. All right, so going up to the weekly chart, silver's going higher, likely much higher. So we have a weekly fair value gap here now. So I will suspect this is going to support price higher. if we do trade down into it, let's make that blue because we're bullish. If we trade down into it, I would want to see us stay in the upper half and keep trading higher. Everything still looks bullish for me on silver. And then zooming way out, like historically, let me see where we're at. Yeah. 37.50 would be a nice level on the upside. All right, weekly chart, covered that fair value gap there. Dropping down into the daily here. So we covered last week that we wanted to see this gap here be a breakaway gap. This gap should not be filled. Why is that? Because it's a fair value gap leaving a consolidation. When there's a fair value gap leaving a consolidation, you always want to see that be a breakaway gap. We did drop down into this one, which we did say was permissible, right? The market can trade down into this gap. I really like how it stayed in the upper half. That's extremely bullish, and we traded higher. So we're looking for higher prices on silver. I would essentially treat this like all-time high protocols. Just keep trusting your buy models as long as the institutional order flow remains bullish. Amy, thank you for your insights. My absolute pleasure. Glad to be here. All right, guys, I'm going to get going. It is sunny. It is beautiful out today. I want to get to the beach, but before that, I got to get this next mentorship video recorded and done so that we can keep the train rolling in mentorship. So with that in mind, guys, have a beautiful rest of your Sunday. I will see you guys on the next one. Take care. Stay safe. Appreciate your guys' amazing questions. And again, happy Father's Day to everyone out there. See you guys.